Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to analyze Salesforce stock. Specifically, I will talk about why I think Salesforce is one of the best AI software-as-a-service stocks over the long term. Before I start, I would like to give you some context first. Over the past 1 year, you can see that Salesforce has recovered a lot from the bottom in early 2023. But recently, you can see that Salesforce stock did drop quite a lot even though Salesforce reported higher earnings, higher margins, and higher free cash flow than expected. There are several reasons for this large drop. First, Salesforce gave a soft guidance that is lower than Wall Street's expectations. Second, several sources reported that Salesforce was considering acquiring Informatica for $10 billion, but the deal did not go through. Many investors and analysts were concerned about this because Salesforce changed its acquisition strategy last year after active investors forced the company to focus more on improving profits instead of acquiring large companies at the expense of shareholder values. Now, Salesforce management seems to have the appetite to have large acquisitions again. In my opinion, I think the market overreacted to Salesforce guidance and this rumor acquisition. So in this video, I'm going to explain why I believe Salesforce is one of the best AI software-as-a-service companies for long-term investing. You will learn about these topics in this video. First, I will give you a quick stock portfolio update. Then I will talk about Salesforce business financials and biggest risk going forward, Salesforce long-term growth prospects, Salesforce stock valuation, and will I buy Salesforce stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos a week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make. So if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, watch my investing tutorial videos, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. If you have been following my channel, you will notice that I'm mainly a growth investor. I mainly invest in the largest tech companies that are the best in their industries. For example, I've invested in these outstanding companies: Microsoft, Apple, Nvidia, Google, Amazon, Meta, TSMC, Broadcom, and Tesla. I like to invest in the best tech companies that have very large economic moats, great products and services, great management teams, great long-term growth prospects, increasing earnings, and increasing free cash flows over time. Once I find the best tech companies to invest in, I like to invest in them only when they're undervalued or at least when they're fairly valued, so I can grow my stock portfolios exponentially over time. Now, many subscribers ask me why I only invest in the largest tech stocks. How come I don't invest in the small caps or mid caps? There are several reasons. First, large caps in the S&P 500 and Nasdaq 100 are generally much safer and have lower risk than most small caps. Second, you may not know this. Most business schools and advisors teach you that small caps tend to outperform large caps over the long run. This is completely wrong. Small caps in general do not outperform large caps over the long run. Here's why. Most small caps are very bad or mediocre businesses that do not earn consistent profits and free cash flows yet. Only very few small caps are great businesses. In comparison, most large caps in the S&P 500 and Nasdaq 100 earn much higher and more consistent profits compared to the small caps that are in the Russell 2000. This is why you can see that the Nasdaq 100 and S&P 500 have outperformed the Russell 2000 by a lot over the past 1 year. Over the past 3 years, the Nasdaq 100 and S&P 500 have outperformed the Russell 2000 by a very large margin. And over the past 5 years, the Nasdaq 100 and S&P 500 have also outperformed the Russell 2000 by a huge margin. This is why I don't invest in small caps or mid caps. Only very few small caps are great businesses, but there are many large caps that are great businesses. I mainly invest in the largest tech companies that are the best businesses in their industries. I'll give you more examples here. This is one of my stock portfolios. This portfolio is separated into 3 different accounts. All of them are doing very well because I have invested in many outstanding businesses and all of them are large caps. For example, in the first account, you can see that I have several multi-bagger stocks: MasterCard, Microsoft, Visa, and Amazon. Google is almost a 2-bagger stock. This is the second account. You can see that Apple is a 10-bagger stock, Google is almost a 3-bagger stock, Visa is already a 2-bagger stock, and Microsoft is almost a 2-bagger stock. I also have TSMC, Amazon, and Nvidia in this account. Of course, they will continue to benefit the most from the current AI boom. This is the third account. This is a newer account compared to the other two accounts. In this account, I have invested in Microsoft, Intuit Inc., American Express, MasterCard, Nvidia, TSMC, Google, Amazon, Visa, Synopsys, Broadcom, Apple, Meta, MSCI Inc., Adobe, and Tesla. They are the best businesses in their industries. Most of them have large exposures to AI and semiconductors. I have bought many of them over the past 1 year, so it will take a while for them to become multi-bagger stocks. Last month, I sold my Salesforce shares and made a decent 24% gain. I sold it because I thought that Salesforce was overvalued. Then I reinvested the money in other companies such as Meta that was more undervalued. In hindsight, I shouldn't sell Salesforce. I'm planning to buy back Salesforce soon whenever it's undervalued. Here's the important part. Right now, many tech stocks are likely overvalued. The market is becoming very optimistic and greedy again. In fact, the Nasdaq 100 has reached another all-time high because the US inflation is dropping to the 2% inflation target. The Fed will start cutting rates soon once they're confident that the US inflation will decrease to a 2% target. All things considered, if the market becomes extremely greedy later on, I will sell some shares to have more cash on hand so I can invest in the best Y-mode businesses when the market becomes very fearful again. I think it's important to be very fearful when the market is very greedy. Now, going back to Salesforce, I want to talk about its business model, its financials, and its biggest risk first. So, what is Salesforce? I asked ChatGPT to write this description about Salesforce. Salesforce is a leading cloud-based software company known primarily for its customer relationship management (CRM) service. CRM is a strategy for managing an organization's relationships and interactions with current and potential customers. Salesforce helps businesses grow by improving business relationships. It also offers a suite of enterprise applications focused on customer service, marketing automation, analytics, and application development. How does Salesforce earn its revenues? Salesforce generates revenue primarily through the subscription fees from its cloud services. Customers pay for different products such as Sales Cloud, Service Cloud, Marketing Cloud, and data integration and analytics, typically on an annual or multi-year subscription basis. This model provides a predictable and recurring revenue stream. Salesforce also earns revenue from professional services such as consulting, training, and implementation services. Salesforce Einstein AI tools are integrated with all these applications. Typically, if you want to use Salesforce Sales Cloud application, you will pay at least $25 per user each month or as much as $500 per user each month if you want to use Salesforce most advanced Einstein AI tools. Other than Salesforce cloud-based CRM applications, Salesforce also has a very large app marketplace called App Exchange, which sells thousands of third-party apps that are integrated with Salesforce CRM applications. Based on what I know, this App Exchange marketplace makes Salesforce CRM apps very sticky. Once you're used to Salesforce CRM apps and App Exchange, it's very hard and costly to leave Salesforce ecosystem. I want to show you Salesforce's most recent financials here. Salesforce total revenues are mainly subscription-based. Subscription revenues contribute about 93% of the company's total revenues each year. Salesforce subscription revenues are separated into these cloud services: Sales Cloud, Service Cloud, Platform and Order, Marketing and Commerce, Data Integration and Analytics. Salesforce data integration analytics business has been growing much faster compared to other cloud services. I'll talk more about this later on in this video. Salesforce has a very strong balance sheet. For example, at the time of making this video, Salesforce has $14.19 billion in cash equivalents and $12.59 billion in total debt and lease liabilities. This means Salesforce will still have $1.6 billion in cash left if Salesforce pays off all its debts and lease liabilities. Of course, when it comes to investing, we have to be forward-looking instead of backward-looking. But I want to show you Salesforce's past growth rates and operating margin here, so you will understand how Salesforce strategies have changed since 2023. Salesforce has had very high revenue growth and free cash flow growth over the past 10 years because of organic growth and because of many large acquisitions over the years. But here's the important part. Over the years, Salesforce operating margin was very low, well below 5%, because Salesforce focused much more on revenue growth and mergers and acquisitions at the expense of operating margin. Oftentimes, Salesforce had to issue a lot of shares to acquire other companies at huge premiums, such as Tableau in 2019 and Slack in 2021. Of course, many investors were not happy with Salesforce's mergers and acquisition strategy at the expense of profitability before. But in 2023, activist investors forced Salesforce to change its growth strategy to cut down costs, have fewer large acquisitions, and focus much more on profitability instead. This is why Salesforce operating income, operating margin, and free cash flow improved a lot in 2023. Here is Salesforce's biggest risk going forward. Salesforce stock dropped a lot recently because Salesforce management gave revenue guidance that was lower than Wall Street's expectation. For example, Salesforce guided its total value to grow 9% year over year and its subscription revenue to grow 10% year over year in fiscal 2025. This is slightly lower than most analysts' estimates. In fiscal 2025, Salesforce GAAP operating margin is expected to be around 20%. Non-GAAP operating margin is expected to be around 32.5%, and operating cash flow is expected to grow around 21% to 24% year over year. This shows that Salesforce will continue to focus more on improving profitability instead of mergers and acquisitions. Over the past quarters, Salesforce subscription revenues were growing at much higher rates. Now, Salesforce management expects that the company's subscription revenue will grow at around 10% year over year in fiscal 2025, which is much slower than in past quarters. And if we look at this financial forecast from analysts, we can expect that Salesforce revenue growth will be much lower going forward. This is assuming Salesforce will not have large acquisitions over the next 5 years. Salesforce is much bigger than before, so we shouldn't expect Salesforce to have very high double-digit revenue growth rates going forward. I think it makes sense that Salesforce will focus more on improving profits going forward. This is another risk we should consider. If Salesforce decides to acquire large companies like before to grow the company's total revenues, we can expect that Salesforce will need to issue more shares and pay very high premiums for these large acquisitions. Of course, these large acquisitions will likely affect Salesforce operating margin again. Let's talk about Salesforce long-term growth prospects. I believe there are several growth trends that will benefit Salesforce going forward. First, Salesforce has been the market leader in the CRM market for many years. Salesforce's closest competitors in the CRM market are Microsoft, Oracle, SAP, and Adobe. Typically, once a software company becomes the market leader in its industry, it's very hard for competitors to take away its market share. I believe this applies to Salesforce. Based on what Salesforce retention rate has been improving gradually over the past 20 years. For example, according to Salesforce's most recent earnings call, Salesforce management expects that the company's attrition rate will be slightly above 8% in fiscal 2025. This means Salesforce retention rates will be around 92% in fiscal 2025. This suggests that Salesforce CRM applications are very sticky. Once customers start using Salesforce CRM platform, it's very hard to switch to other competitors' CRM platforms. Here's another important part of Salesforce CRM business. Many large Fortune 500 companies and large enterprises already use Salesforce CRM applications such as Sales Cloud, Service Cloud, and Marketing Cloud. CRM applications are mission critical for most businesses. You need CRM applications if you want to increase your sales and build great relationships with your customers. It's very expensive and time consuming for companies to build their own cloud-based CRM apps that can be used by thousands of employees. So it makes sense for many large enterprises to invest in Salesforce CRM applications. At the time of making this video, Salesforce owns around 23% of the global CRM market. This has been the trend for many years. Microsoft, Oracle, SAP, and Adobe are still far behind Salesforce in the CRM market. According to this market research, the CRM market is expected to grow at a compound annual growth rate CAGR of 10.59% between 2024 and 2028. Also, according to another market research, the US CRM market is expected to grow at a CAGR of 12.5% between 2023 and 2030. This shows that the CRM market is expected to grow at around 10% to 12% annually over the next several years. I believe this trend will benefit Salesforce going forward. More companies will need to use cloud-based CRM software that has AI capabilities that will help them increase their sales and build great relationships with their customers. I showed you these financials earlier. Salesforce operating margin, operating income, and free cash flow improved substantially in 2023 because Salesforce management changed its growth strategies. Before 2023, Salesforce focused much more on growing the company's revenues through very large mergers and acquisitions, but this impacted the Salesforce margins a lot. Now, Salesforce management focuses on improving the company's profits and free cash flows by cutting more costs, have fewer employees, reducing office space, and most importantly, having fewer large acquisitions. I think this is the right strategy because Salesforce can still grow its CRM cloud services organically without hurting the company's margins. Salesforce CFO said this in a recent interview. She explained that Salesforce will still have very large acquisitions going forward, but Salesforce will make sure that these large acquisitions will not impact the company's long-term operating margin goals. In terms of larger M&A mergers and acquisitions, what we have to do, and again, I'm sure it will be part of our future at some point, we have to show you we can do it in a way that's responsible. So it's got to be the right value and a value we can defend. It has got to be the right product that's going to either add to or really supplement a key part of our strategy. We have got to preference our balance sheet, so we're going to have to prioritize cash and debt over the use of equity, and we're going to have to show a path to value accretion. Now, someone asked me one time if that meant we will only buy companies that have a better operating margin than we do. That would be a very small group of candidates at this point, so that won't necessarily be the case. But if we do buy a company, I've got to be able to stand in front of you and show you what is the path to value accretion and making sure that it does not lock us off our long-term goals on the operating margin. Salesforce CFO also said this about Salesforce cross-sell opportunities. She explained that Salesforce still has a lot of organic cross-sell opportunities because about 80% of Salesforce customers have 3 or fewer cloud services with the company. I showed you this growth rate earlier. Salesforce data integration and analytics business is the company's fastest growing business compared to other cloud services. In recent quarters, you can see that Salesforce data integration and analytics business has been growing faster than other cloud services. Here's the important part of Salesforce data integration and analytics business. I believe this trend will continue to benefit Salesforce for many years. Based on what I know, I believe many large companies are looking for ways to integrate their large amount of data from different data silos into a single platform so they can analyze their customer data and internal enterprise data, create great insights about their businesses, and of course use generative AI and other AI tools to help them increase their sales, make better investment decisions, and improve their productivities. At the same time, large enterprises want to protect their own data and create their own AI models and AI tools in order to stay competitive. Salesforce CEO and co-founder said this about Salesforce Data Cloud business. We got lucky. We have done it with organic innovation with Data Cloud. I think Data Cloud is everything that we want at this moment for a few different reasons. First of all, yes, it's an incredible new cloud, and we're seeing what that kind of can do for Salesforce when we had Sales Cloud to Service Cloud to Marketing Cloud to Platform. And of course, we also had these other clouds that we pick up inorganically, Commerce, Tableau, Slack, etc. But this incredible new organic cloud, the difference with this cloud and the difference between what's ever happened with Salesforce before, this cloud makes every other cloud better. So the hot new exciting version of Sales Cloud, the hottest new feature in Sales Cloud, what's going to transform the tens of thousands of Sales Cloud customers that we have out there that we have been working on building for the last 2.5 decades is Data Cloud. And the new version of Service Cloud is the Service Cloud plus Data Cloud. We vanquish all of the other competitors completely with this product because it's so deeply integrated with what we're doing already and everything else in marketing. And the platform is extended with Data Cloud. And if you have this other data infrastructure in your company, any of the big queries and the Redshifts and the Snowflakes, I went through all this. It's made better with Data Cloud because it unleashes that trapped data to your users. This is a compelling reason to use Data Cloud all by itself, but that would be if we were not in the greatest transformation of our industry with artificial intelligence, where we so badly need this data. We would have loved to have a data lake integrated with Sales Cloud many years ago. Okay, we have that, but why is it more important right now? Yes, we have the data lake, we have the repository, we have the warehouse, but now it has deeply also integrated into the AI. That's why every customer must buy this product if they're going to achieve the nirvana that we can see for businesses. the trinity that we talk about: productivity, customer relationships, margins, when you get data and AI working together. According to Gartner, Salesforce Data Cloud business is indeed one of the market leaders in customer data platforms. I think this supports what Salesforce CEO said about the company's data cloud business and its growth potential going forward. Let me show you Salesforce consensus revenue and EPS growth rates here. According to Seeking Alpha, Salesforce revenue is expected to grow around 9% year over year in fiscal 2025. This matched the company's revenue guidance. After that, Salesforce revenue is expected to grow around 9% to 11% each year over the next several years. I believe these expected growth rates are reasonable. They match the CRM market research I showed you earlier. In terms of EPS estimates, Salesforce EPS is expected to grow much faster than its revenue growth rates over the next several years because Salesforce has changed its strategies to focus much more on improving profits going forward. I want to show you how to calculate Salesforce stock's intrinsic value here so you will know when Salesforce becomes undervalued, fairly valued, or overvalued. If you want this intrinsic valuation model, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define Salesforce intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 10.5% here. You can use a higher discount rate here if you want to be more conservative. Based on the long-term growth prospects and the expected growth rates I showed you earlier, I believe Salesforce revenue will grow at a compound annual growth rate CAGR between 8% and 10% annually over the next several years. I believe these revenue growth forecasts are very reasonable. I'm using a much higher 30% free cash flow margin here because Salesforce management has changed the company's strategies to focus much more on profitability. We can expect that Salesforce operating margin will continue to improve going forward. Let's go over these three case scenarios: worst case, normal case, and best case scenarios. Under the worst case scenario, we're forecasting that Salesforce revenue will grow at a CAGR of 8% over the next several years. If we forecast Salesforce free cash flow over the next several years and discount the free cash flow to the present day, Salesforce intrinsic value should be around $299 billion for the entire company, or $298 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we're forecasting that Salesforce revenue will grow at a CAGR of 9% over the next several years. Then Salesforce intrinsic value should be around $312 billion for the entire company, or $311 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting that Salesforce revenue will grow at a CAGR of 10% over the next several years. Then Salesforce intrinsic value should be around $325 billion for the entire company, or $325 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Salesforce intrinsic value should be around $311 per share. I also used the forward sales valuation model to estimate Salesforce intrinsic value, which should be around $297 billion for the entire company, or around $296 per share. If we take the average of both valuation models here, I believe Salesforce intrinsic value should be around $304 per share. Just to compare, Morningstar gave Salesforce a very similar fair value of $300 per share. This means I believe Salesforce is still slightly undervalued at the time making this video. So will I buy Salesforce stock? Yes, I will likely buy back Salesforce going forward whenever it's undervalued. There are several reasons. First, Salesforce operating margin and free cash flow margin are expected to improve more going forward because Salesforce management has changed the company's strategies to focus much more on improving profits. Second, the CRM market is expected to grow at a reasonable CAGR of 10% to 12% each year over the next several years. Salesforce is the market leader in the CRM market, so this trend will benefit Salesforce going forward. And third, I expect that Salesforce will continue to be the market leader in the CRM market for many years because Salesforce has the most comprehensive CRM cloud services in the market. Based on what I know, Salesforce CRM applications are mission critical for many large enterprises. It's very costly and time consuming to switch to another CRM platform once you are used to Salesforce CRM platform and ecosystem. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. I think it's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.